Good evening, everybody, and welcome to our webinar this evening, where we're going to take a look at what the election might mean for the property market. So thank you so much for joining us this evening, and I will shortly introduce each of our panelists. Before we get to that, just to let you know that we will record this evening's webinar, so you can watch it back. We'll send it through to you, and we will also share the contact details as well for everybody that's taking part today, so that you can follow up with each of us all individually, because no doubt we will answer many questions, but inevitably there will be some that we can't get to in this 1 hour webinar. So please do follow up with us afterwards with any questions that we cannot answer live over the next hour. But otherwise, I'm really looking forward to this evening's webinar. I think it's a really exciting topic. All of us are keen to understand what implications there might be for the property market in the run-up and post-election. So thank you again for joining us. Let's go to introductions. So I'm Nikki Stevenson, I'm MD at Fine & Country, and I'm joined this evening by James, Ed and Jonathan. Jonathan, would you like to go first and introduce yourself to those on the call today?
Yes, thank you, Nikki. Good evening, everyone. Hope you're well. Thank you for joining us this evening. So my name's Jonathan Watson. I'm a currency specialist at Lumon. So who are Lumon? We're an international payment provider. We work very closely with Fine & Country and lots of international estate agents, notaires, lawyers, anyone really interested in the international property market. And really we're here to help with competitive rates of exchange, but also support for anyone looking to move funds internationally. So competitive rates of exchange, but it's also about managing your budget, and we'll certainly run through some of the important implications of an election on your international budget this evening. So thank you very much for joining us. I'm looking forward to sharing more about how the election could impact your finances.
Excellent, thank you very much. Ed, over to you.
Hi there. So I'm Ed Taylor. I own and run a business with Fine & Country in Wiltshire and West Berkshire. We specialise in the upper quartile of the market, and we provide a sort of bespoke service for clients. I very much am an estate agent at the coalface for the purposes of this, so hoping to provide some insights to what's sort of happening on the ground, what people are saying from the conversations we've been having over the past few weeks, and what predictions there might be, what mood might be there going into the election next week.
Brilliant, thank you very much, Ed. And James, over to you.
Yes, hello, good evening, everyone. My name's James Oliver. I'm an independent financial advisor. I run my own client practice based mainly out of Dorset and Somerset. I've been in the industry 20 years. My firm is a chartered firm, and we are very holistic in our approach. We get involved in a lot of mortgage advice and a lot of investment advice. People come to us wanting to know what to do with their money, often through good and bad times. And hopefully this evening I can touch on how it's going to affect borrowers. Probably is probably quite a key thing to pick up on. We're also going to touch on some tax implications as well, and really looking forward to going through the questions. Brilliant,
thank you very much. So before we get into, I suppose, the policies and the manifestos that we've had a look at, I mean, in your experience, Ed, if I come to you first, with previous general elections, what has typically been the impact on the property market, and are you seeing that at the moment, and what are your kind of experiences so far?
So yeah, anecdotally, it's been quite unusual this time round. Things have happened seemingly very, very quickly from a sort of election being called that we're expecting to be much later in the year. So I think that's a big positive, actually, just having certainty and having a firm, sort of outlook one way or another will be very good for people to sort of move on and make the big decisions in their lives. I mean, previously in other general elections that I've worked through, and I worked in London for 12 years, you'd have a sort of complete hiatus of activity for the period of the election, and things seemed to rumble on for months and months and months. And obviously we had the referendum as well, which was so divisive, and really sort of caused anyone making a big decision and spending a huge amount of money on a property to just wait until it was decided. Very interestingly, this time around, it doesn't seem to have had any effect whatsoever that I can discern. I've polled colleagues and estate agents across the country on LinkedIn, and the majority of them are actually seeing an increase in business over this period. And we're seeing, very few people reporting any sort of downturn in activity. I'm yet to have a single conversation with a buyer or seller who is considering not doing something or considering doing something because of the general election. I think, there may be some taxation elements and some things that will cause people to reevaluate their property portfolios and their holding and things. We're having a few conversations around that. But, the sort of immediate effect, there doesn't seem to have been one, and the market has shown great resilience, in my opinion.
Really positive, thank you. And Jonathan, from your perspective, when it comes to currency exchange and the value of the pound, what have you seen in the past when it comes to general elections and, I suppose, behaviour and the, I suppose, impact on the value of the pound?
Sure. So looking at the currency markets, it's really about certainty and uncertainty. That's one of the key behavioral elements of the currency markets. When there's confidence, you can see a currency strengthen. So when we're talking about an election, often in the run up to that, Ed sort of touched on this, you can see a bit of uncertainty creeping in, and typically that would see sterling weaker, going by the history. In fact, with this election, and so Ed's absolutely right, it's just sort of come out of nowhere. I can't believe it's only a week to go now. We've actually seen the pound getting a bit stronger. Now, why is that? Well, actually, when we're looking at the policies for Labour, there's not a huge amount of changes actually planned. They've committed to a lot of the spending plans of the Conservatives. They've pledged not to raise the headline rates of VAT, income tax, national insurance. So where historically, you could get a bit of diversion between the two parties. Of course, Labour historically, there had been some more sort of concerns about the economy and spending, etc. Unfortunately, the UK has a very high debt burden, and there isn't much money to sort of throw around at the moment. So both parties are very closely aligned in terms of what economic plans they can make. So it's an interesting one, and we'll be covering more about certainly some of the other areas of tax where perhaps we will see some changes. But in these sort of more important headline areas, there's not been big changes. And actually, Labour is being seen more as a stable hand of government than perhaps the Conservatives. If we look at the Liz Truss Kwasi Kwarteng episode, markets really lost faith there. That emergency budget, sterling struggled. There was all sorts of wider implications in financial markets. There was that quote by Boris Johnson, the F word and business. That isn't really going to warm the hearts and minds of the economy, and the Conservatives historically the party of business. So we are seeing a bit of a change there. Conservatives not being so warmly welcomed, perhaps in many respects. Labour putting themselves as now a more centrist party of business, and the market has embraced that. The UK economy has bounced back from the recession that we entered at the beginning of the year. Interest rates are still high, inflation is dropping, but we're not seeing any major changes in the immediate future as a result of a change in government. So I think where we could see some bigger changes is if the pollsters have got it wrong. Now let's go back to, say Ed mentioned Brexit there. Of course, the pollsters got that one wrong. Pretty much every election we've had, these pollsters do get things wrong. I've been talking to clients about the 2017 election. Theresa May, she actually had a similar lead ahead of Labour, about 20 points. And when it came to it, it actually ended up being a hung parliament. Now that lead narrowed as we got closer to the election, and Labour are still very much ahead in the polls as we speak today. So we're not looking at a hung parliament, but have the pollsters got it wrong once again? This is actually a real test for them to see if once they can be accurate, and of course it's not totally their fault. But in terms of what's happened to the pound, in answer to the question, at the moment sterling is holding fairly steady. We'll have to, of course, see what the election brings. I might add, certainly for international clients concerned with the euro, as if Rishi Sunak calling a surprise election wasn't enough, you've had Emmanuel Macron, the French president. He's called his own snap election. How they do it in France, just to quickly summarise, it's not just a one-day event. They have the first round this Sunday, the 30th of June. So we'll get on the Monday then, the top 3 or 4 candidates, anyone who's scored above 12.5% goes through to a second round on Sunday, the 7th of July. That's the second round. So from a currency market perspective, we've not just got the UK election next Thursday where we could see some turbulence. Actually, we've got the outcome of the French election in that same week and the following Monday. So lots to talk about there from a currency rate perspective. Just very quickly, our research at the average market movement from a UK general election has looked at about 5% movement for the pound. That's a pretty big swing, and that's an average movement over the course of the last 6 elections. So at the moment, there hasn't been too much uncertainty, it hasn't been too much trouble there, but history does tell us we can see movements around these events. So yeah, we'll have to wait and see.
Excellent summary. Thank you very much. Really interesting. And James, from your perspective, obviously working with mortgages as well as people's decision making with their finances, what have you seen in the past with regards to general elections, and are you seeing any changes right now?
So it's an interesting one because we've obviously had a Tory government in now for 15 years, give or take. We've had a huge amount of events happen in the last 5 years. Generally, on the run up to an election, you tend to find people want to just sit on the fence and wait and see what's going to happen. But as I think Ed said, it's not really been the same this time round, probably because it's been quite a quick affair and people haven't really worried too much about it. I think what's probably likely is if you do see a Labour win, I don't envisage any major changes very quickly, because I think the last thing markets want, whether it be currency markets, mortgage markets, housing market, is they don't want surprises or things that are not priced in. And we saw that, as Jonathan quite rightly said, with Liz Truss. So I think you may very well, in my opinion, see a safe pair of hands if Keir Starmer gets in. That wouldn't surprise me. On the whole, I don't think activity's really changed that much from the mortgage side of things. We are still seeing people buy. I think what will be apparent though is as the changes come on through with regards to taxation, you could see pension changes. You could also see changes to capital gains tax, VAT. I think the need for up-to-date financial advice is going to be really important. So whether you're running a business or you're just personally looking after your own affairs, or whether you've got one buy-to-let, for example, I think there will be a good need for getting up-to-date information. But my personal view is, and I've spoken to quite a few advisors in my sector, is that there's probably not going to be too much change in the short term, and I think that would be a sensible way to play it. There's not really a lot being given away in any of these manifestos. I don't know what other people think, but no one's doing anything drastic. I mean, I think the biggest concern I'm seeing from clients is the school fees, the VAT on school fees. Where we live, there is a lot of private school fees and private schools, should I say, and I think that it'd be interesting to see whether he follows through on that.
Definitely.
If I can just jump in,
yeah.
Actually, there's quite an interesting play into the housing market there as well with school fees and the potential for obviously those really good state schools, catchment areas, for demand to go through the roof on good quality family homes in those areas if there is this mass exodus from private education that some are predicting, not all. It remains to be seen how big an impact that's going to have, but it just might have quite an interesting repercussion that actually goes against probably the intention of the policy in terms of sort of levelling up and having a more sort of equal society. It may have the opposite effect in some cases.
Well, let's have a look at some of the points that we've seen in the policies and the manifesto. If we have a look at the next slide, I think what we do know is that the conversation today is going to be looking at the manifestos and the policies that both Conservative and Labour have proposed. We can see from the BBC here the most recent data that it is a kind of 2-horse race, but really it is looking more likely to be a Labour outcome. So based on that, let's have a look at some of the housing policies that both parties have put together. So there's quite a lot of text in here. This is all relating to their housing building targets and where they're going to build. So we've got Labour committing to build 1.5 million new homes over the next 5 years with an affordable housing element to it, and Conservative, similar number, set a target of building 1.6 million new homes over the next 5 years as well. And we've got all the detail here around some of the elements that they're going to adhere to with that. I mean, Ed, from a property perspective, how important is it for these new build properties to be built? And is this something that you think is achievable? How is it going to impact the housing market?
Well, yeah, I mean, no secret, is it, that we're dreadfully short of good quality housing in the UK. There is a real housing crisis out there, and successive governments and successive administrations have failed to build sufficient homes. I think we've had something like 15 different housing ministers in the last 12 years. So we've had this really unstable kind of environment, and we've got lots of things that have prevented the houses being built. Planning laws, you can see in Labour's policy there's a line about investing in additional planning officers. I think, at the local authority level, these departments are just absolutely, struggling to cope. And hence, if you try and do an extension on your house or something, you're waiting months and months and months to hear back on it. So getting some of those bigger projects back through and some of the bigger housing schemes and things that the demand is definitely there for, is sometimes so stymied by the process it's got to go through. So I think, obviously welcome massively the targets, and I think the Lib Dems are on 380,000 a year, their target as well. So they're all roughly similar numbers actually, interestingly, but I think it's just the method by which they can actually deliver it. It's all very good, promising a nice big number, isn't it? But the methodology and the way in which they've been delivered hasn't happened to date. I hope it will be. I mean, obviously we've got problems as well with NIMBYism, and we all recognise we need new houses, but we don't want them built next door to us. Thanks very much. It's difficult, and I think it's also got to be part of a bigger strategy as well, and these things have got to be joined up. I mean, you have the sort of the local plans at sort of local government level, and the neighbourhood plans and things, and look, to some extent they are good to give local people a say, but it's still not enough, and we're still not focusing on the infrastructure we need enough to support the communities and support the houses, to have jobs in the right area, to have the transport links, to have schools, doctors, dentists. All of these things are so interlinked and intertwined. You want to be looking at building a community rather than a housing estate, a lot of this time. So it needs a much bigger sort of view and policy, I think, to really work well, which it could, and I think just a stable environment, one way or the other. If we get whatever government it is that takes on next, we just want a stable environment of some straightforward policies that are going to continue, and I think that will help build confidence in that sector as well, and drive investment in, because the sort of flow of capital into house building has always been a little bit cautious, so we need to free that as well.
Brilliant, thank you, Ed. And James, have you got anything to add on this part?
I think mortgage borrowing costs are going to play a big factor in whether people are buying houses. Obviously, you would like to think that Labour would tend to spend more money than the Tories. Historically, that seems to have always been the case. So generally, when you start ploughing money into communities, into projects, it does ultimately lead to better growth. So you would expect that to happen on the back of a Labour win, really. I always find it interesting when they say we need more homes, and it's always a question that I've yet to really find the answer to it. Do we need more homes to buy, or do we need more local authority homes, or is it a combination of everything really? Because I don't know the answer to that. I don't know anybody else does really.
Oh yeah, I mean the social sector is desperately short, isn't it, of homes as well. And I think you're right. And the thing they, one of picking again at a Labour policy is to give first dibs to first-time buyers on new build homes. Well, what that does, if you're then taking it away from investors, is it creates shortage in the rental market potentially, because you're then not getting those properties coming on for rental. So we often talk about the sales and lettings markets as if they're totally different beasts, but if we're talking about the same asset, of course, the same house that could be let or could be sold to a first-time buyer. So yeah, it's very interesting to see how that sort of things. And you could argue that with some of the mortgage support and things, for first-time buyers, should we be helping them, or should they be renting? What sort of a society do we want?
The one thing I would say is, since we've seen increased interest rates over the last 2 years, in my particular area, I would definitely say we've seen an increase in percentage of first-time buyers buying as opposed to home movers, because actually a first-time buyer doesn't really know any different whether they were paying 2%, 5%. They don't know any different. If it's affordable, if it's a house they want, they're looking to buy. And you have seen a lot of landlords offloading, and generally that is 2 and 3 bedroom stock. So that's what we're seeing out there, at least.
Excellent, thank you. We've got a few more points to go through, so if we move on to the next slide to see what the next policy is that we're going to take a look at, which is stamp duty. So Labour have suggested that they would raise the stamp duty land tax surcharge paid by non-UK residents by 1 percentage point. Conservatives have said no increases, and they would look to permanently abolish stamp duty for first-time buyers, costing up to £425,000. Ed, I mean, from looking at this, do you see a particular impact on the property market here, one way or the other?
I think they're quite bland policies in a way. They're not, going to frighten anyone too much or excite anyone too much. I think, nice little help for, stamp duty from the Conservatives for first-time buyers there. I guess that is an area of the market where people probably have felt the cost of living squeeze and things the most, and that may just be the help they need to get on the rung of the ladder. I don't see that the stamp duty 1% non-UK residents is going to affect anything really in the grand scheme of things. I think it's too small a difference to really change anyone's big decisions. And if you speak to a good currency specialist, they can probably save you 1% on the transfer rates anyway by locking it in at the optimum moment. So if anyone knew one, eh?
Absolutely.
Yeah, we'd certainly be able to help cover any additional charges there with some expert information about the markets and different options. And yes, we can demonstrate savings over the banks, so it'd certainly be good to have that conversation. But yes, totally agree. It's perhaps with some international investors, they've got their heart set on the transaction one way or the other. So to be changing such a delicate way, stamp duty's probably had some scope for some more impressive reforms for a long time, and it doesn't look like this is really changing the dial much on that. But no, absolutely, from a currency market perspective, we could potentially offer a better rate to cover that.
Brilliant, thank you, James.
I think just looking at those 2 points you brought up on the screen there, none of them actually help really home movers. And I think the biggest, I was chatting to an agent earlier on today, and the biggest, they've got a huge pipe, well, huge, they've got a reasonable pipeline of properties for sale under offer, but they're struggling to get the exchanges through, and they're struggling to put deals together. And a lot of the reason for that is because it is expensive to be a home mover. If you're going from 500,000 to 800 or whatever the figure is, at least you're paying the going rate. And looking back to 2020, 21, when you had that stamp duty holiday, it was unbelievable how that stimulated the market. Now, I am not definitely saying that is a good idea, because it did create a bubble, but I do think the whole thing needs a reform. Certainly, back to what we're talking about tonight, I don't think that either of those are going to do much in the way of stimulation to the housing market. We've already got that 425 in, and as Jonathan Ed said, if someone's looking to buy from overseas, then they're not going to care about 1%.
Okay, brilliant. Thanks for your views on that. Let's have a look at the next policy that we've got to debate. So first-time buyers and mortgages. We've already heard about the stamp duty element there, but Labour are looking to give first-time buyers priority access to new build, which we have briefly touched on already. I mean, is there anything in here, Ed, from your perspective that we haven't covered already that you think is worth discussing or sharing your views on?
I think policy is very difficult around the mortgage help when you're putting a cap on the purchase value because of the differences across the UK in purchase values. I mean, you know, at 400,000, you know, in parts of London, you'd be lucky to get a studio flat, whereas in other parts of the UK, that could be quite a nice, you know, 3 or 4 bed family home. So it's really that's a challenge of geography around this, isn't it? And whether there should be something that's administrated on the local level or not, who knows? But yeah, it makes it very difficult to sort of help. And you know, the thing is that the higher house prices tend to be where the jobs are. They tend to be where the infrastructure is, where the amenities are, and where people want to live. And you know, that's always going to be a sort of difficult balance for any policy like this to help.
And both parties have suggested they'll continue the mortgage guarantee scheme. I mean, James, can you give us a bit of an overview of what the mortgage guarantee scheme is, and do you think that's going to help first-time buyers?
Well, I mean, in essence, all it's doing is it's allowing first-time buyers to buy with a 5% deposit. The government's effectively covering what would have once been a mortgage indemnity guarantee that would have been paid for by the borrower, which some people may remember from all those years ago. I think the reality is, if you've got 95% mortgages available, you've got reasonable stamp duty nil rate band or 0% up to 425, you've got, in my opinion, quite a lot of nice things already in place there, and you would like to think that Labour wouldn't reverse any of those. I know they've spoken about offering first dibs to new homes sites and all the rest of it, but I think that the reality is what will stimulate first-time buyers, as I probably said earlier, is cheaper borrowing costs. And it's as simple as that. You can do 100% mortgages. It doesn't mean that people are going to start buying again. I mean, I don't want to go back to those old days, but I think the reality is when you start to see some rate cuts, you will see things start to move again, and everything's intertwined, whether it's personal debt, whether it's car finance, whether it's mortgage borrowing. A reduction in rates is going to stimulate all of that. It'd be interesting to see what happens with the base rate next month in the UK. Certainly, if you'd asked most commentators earlier on in the year what they thought would happen to interest rates by this time of the year, by this time halfway through the year, in the UK, we were probably pricing in anywhere from 4 to 6 base rate cuts. Now, I would be surprised if we get anything more than 2 or 50 basis points cuts this year, because I think the Bank of England is very concerned about inflation coming back to bite us. And you're seeing, just this week alone, you've seen Barclays, one of the biggest lenders out there, actually cut rates, and generally you see the rest of the high street follow when you see a few big players do that. But a lot of the lenders are quiet at the moment, and I'm getting phone calls from lenders saying, have you got any business? Because they've still got processing centres to pay for. But sorry, back to the question without going off on one. I think the reality is stamp duty is okay for first-time buyers. I think it's the home movers that have where the issue is, in my opinion.
No, that's interesting. And obviously, inflation has been coming down. We're at the 2% target. Do you think interest rates will change post-election, with there being a bit more, I suppose, certainty, or what's your view in terms of post-election and the interest rates? You think
so my view is they're two separate entities that decide interest rates, the government and the Bank of England. So what the Bank of England should be doing, same with the Fed in the US, is they should be looking at the data and they should be saying it's data dependent, and generally they do. And I think most central banks are sitting on the fence, just wanting to see some continuation of inflation staying at where we want it to stay at. And you would like to think that certainty would help things, definitely. But what you haven't really seen is you haven't seen lots of ordered up shops, like you did say in the 90s, for example, as a result of all these interest rates going up, which has surprised me, actually. It has been very resilient. The borrowers out there have been resilient. And I think that's probably because the difference between interest rates hiking this time round versus 20 years ago is you have got a lot more people who are retired with savings. So there are less borrowers. There's also a lot more people with fixed rates that haven't actually yet felt the pinch. I mean, I fixed my rate 2 years ago. I've not seen any difference in payment.
Lucky you.
I am lucky, unlike you, Nikki. So so actually it doesn't affect everyone. And what I also see on the ground is a lot of people have had pay rises, and I'm not saying that everyone has, but a lot of people have seen 5 to 10% pay rises over the last 2 years, which has almost negatively offset the fact that interest rates have, or inflation's been running high, because they've had extra money. We also had the help from the government almost 2 years ago from on household bills. So actually you've had two things going on here. You've had the Bank of England trying to cause some pain, which they openly admit. We want to see pain to borrowers so that it cools things down. But then you've seen the Tories come in and say, don't worry, we'll help you with your energy bills. We've also seen the mortgage charter. I don't know whether anyone's familiar with that, but that was something that was brought in probably about a year ago now, which allowed borrowers to go interest only. So it's great for borrowers because there's that help should they need that. They could also go for a 6-month payment holiday. So there's help for borrowers, but it's almost it's counteracting what the Bank of England want to do. So one of those things.
I think it's amazing, isn't it? Oh, sorry.
I was just going to say on the inflation, you're absolutely right, everyone. This headline inflation number has come down to 2%, which is, of course, the Bank of England's own target. But there's a key number when you dig a bit deeper, and it's the services inflation. Of course, services makes up over 80% of the British economy, and that's still running much higher than they expected. Off the top of my head, I think it's about 5.7, 5.8%. So that's basically a lot of the services that we're paying for on a day-to-day basis. The prices of those are still going up, and I think, you know, James, you're absolutely right. A lot of wage rises. That's also another metric the Bank of England's been looking at, wage inflation. So the headline rates actually come down. It's a lot to do with energy prices. So that's a more external factor, a more global factor that actually, you know, certainly, well, as we've said, the government doesn't really have too much control over this anyway, because it's the Bank of England that actually sets the interest rates. So I think the Bank of England will really need to see a lot more domestic inflation, a lot of the more homegrown measures coming down before they can make that cut. And that's really another reason why the pound has been much stronger, because, as I say, with the services number still much higher than they want it to be, well above their own target, until that level really starts to come down a lot more, it doesn't seem like we're going to see that interest rate cut. The next Bank of England meeting is in August, so we could possibly see some more talk about things there. They're moving closer. We're getting more and more members of the Monetary Policy Committee leaning towards that cut. But of course, the problem then is if some of these more core measures of inflation that, you know, are less external, like the energy prices, which of course come from overseas, the danger then is they cut interest rates and there's so much pressure on them to do that. And then, of course, that starts to fuel their economic growth. And then we start to see those prices shooting back up, and it just causes problems. So, you know, I'm sort of coming to the defense of the Bank of England here. And, you know, Ed pointed out, you know, the predictions last year, the prediction was for this year, we'd be going up to 6.5% by this summer, that it was just going to keep rising. Then at the beginning of the year, the predictions, they were going to be falling much faster. So they have got a very difficult job trying to get that balance right, and that's why we do see such fluctuations in mortgage rates and currency. But yes, in bringing it all back sort of to the election is a change of the Labour government. Is that going to change the position on interest rates? Perhaps not too materially, because as I say, it's certainly not Labour's own decision. I'd actually argue some of the Labour policies, they're talking very much pro-growth. You know, they're sticking, as I said, to the Conservative spending plans. They're not looking to change in the headline measures of tax. So some of the things they might do that are pro-growth could actually cause inflation to be a bit more of a stickier issue for the Bank of England. And also, if there's that positivity that comes with a new government, again, that could make it trickier for those inflation numbers to come down. So I know in certain ways we do want to see those interest rates coming down for various reasons, but perhaps not quite as fast as that headline number would suggest.
Excellent, thank you. Ed, did you have something to add before we go on to the next slide?
No, I mean, it was going back to James's point, really just amazing we haven't seen more people sort of defaulting on their mortgages, you know, over this period, isn't it? You know, you think it would have quite a shock effect, but, you know, for the reason James mentioned, and obviously, you know, you sort of, your house is the last thing you want to lose, so you cut back in other areas, don't you? And then, you know, don't book a holiday, or don't buy a car, or don't, you know, go out for dinner or something. So I guess that's that was the point there. Just quite amazed, and you know, for the right reasons, positively pleased that you know, it hasn't resulted in that for a lot of people.
Absolutely. Let's have a look at the next slide. So buy to let. I mean, James, from your perspective, you obviously deal with quite a lot of landlords when it comes to their portfolios and financing. I mean, it's been a bit of an interesting few years. I mean, is it worth just giving a bit of an overview of what's happened over the last couple of years, and if you see any particular changes to that post-election?
So over the last probably 5 years now, we've seen a lot of changes which are directly affecting landlords, which I guess ultimately pass on to tenants in what they're paying to rent properties. Probably, I think it was probably about 5 or 6 years ago now, we saw an end to being able to offset all mortgage interest for landlords, which had a massive impact. But the biggest impact really from a pure investment perspective over the last few years has been, or the last 2 years, has been the increasing of interest rates and what that's done to the actual potential return that a landlord is going to see on their investment. So in simplistic terms, if 3 years ago you could borrow money at probably 2 to 2.5%, if you were getting a yield of 5% on a buy-to-let property, you were making 2.5%, 3% on the bank's money. And today, when you're borrowing at probably over 5% and your yield is maybe 5%, you're actually not making any real return from the rent. Yes, you've got the potential for capital growth, but you haven't got much in the way of meat on the bone for the rent that's coming in. And what that's caused investors to do is it's caused them to really reassess their finances and their investments, and they're looking at it to see whether it is actually something they want to continue with. So I think first and foremost, existing landlords, if they've been in the game a long time, are probably sat on decent gains. They're hearing the fact that capital gains tax is going up potentially, probably more so if you see a Labour Party. But already under the Tories, we've seen the personal allowance for capital gains reduce over the last 3 or 4 years. So actually, there's not, again, much incentive if you're a landlord to probably be a landlord at the moment. Now, I think the Labour Party, if they get in, and you know, we don't know what's going to happen, it will be interesting to see what they do there, because if they give landlords, or if landlords continue to have a hard time of things, I think you will see people exit, because we've all got to bear in mind we could go and put money in the bank right now and get 5% with no risk, no fees, nothing, maybe some tax, but it's a difficult one for landlords, and lots of decisions have to be made. So I think that, alongside the other bits that you've got on the screen here, potentially EPC certificates needing to be between A and C, there's just lots of things that landlords have to consider. And again, back to what I said at the beginning, it really is important to talk to a decent estate agent, tax advisor, financial advisor, to actually find out whether buy-to-let is the right thing for you. On the whole, most of my clients, I say to them, if you've got a property and it's making money, you're probably best off keeping it, generally. But again, we don't know what the rules are going to be, and there isn't really concrete detail in these manifestos. So I think we will see what happens.
Absolutely. There's a comment that's come in, and it's a landlord. They were blindsided by the speed of the election, and like most landlords, they hope to offload a majority of their properties before the election, but that hasn't happened yet. So it looks as if they will need to reduce the prices significantly to get rid of the unsold properties. I mean, Ed, what, based on your experience of selling property, is there any particular advice you've got for sellers that haven't yet sold their properties that they do really want to get rid of quite quickly?
Yeah, I mean, generally speaking, we're in a more price sensitive market than we were a year or two ago. And prices, you know, in a lot of areas have come down. Now, they haven't fallen off a cliff, but there's just been a slight correction. Okay. Unfortunately, you know, what often happens is estate agents are very guilty of having rose-tinted spectacles on price to win an instruction, and overvaluing does happen out there quite frequently. So you have at the moment got quite a lot of stock, certainly in my area, that's been on the market, hit the market, and it's just not getting the interest in the viewings it should do, because it's been priced as if it was 2021, 2022, and it's not anymore. It's not that sort of frothy market we had there. So I think, again, it sort of reinforces James's point of speaking to someone, you know, a trusted expert on it, who's going to give you good quality advice on at what price you're going to be able to get out if you're looking to, you know, divest a portfolio. But you know, also if you're a home mover and looking to sell, you know, there is an obvious benefit maybe to having a slightly less sort of frothy and difficult market to buy in on your onward, and taking advantage of that. So it's not all bad news, and I think that, you know, just because things may have come down slightly from their peak, you know, I wouldn't be too worried about that, but you know, I would be worried about sort of hitting the market at the wrong price and having the wrong advice to set out with, which just then puts you in a negative sort of cycle. Then the only option is to reduce your price later down the line, which is never good. You're far better off setting off on the right foot. But yeah, you know, hopefully, as we've seen with previous general elections, if we get, you know, provided we don't get a hung parliament and we get a sort of definitive result, we should see, you know, a bit of a release of anyone who's sort of holding back because of it. Not that I've seen any evidence of that. And I think, you know, as James was sort of saying, if we do get a base rate cut later in the year, that will stimulate activity as well in the housing market. I think there have been, for the last year or so, quite a number of people sort of sat at the sidelines of the housing market, looking in, wondering whether now is a good time to buy or not. And we've had, you know, the press destroying confidence at certain points, which they can do seemingly overnight, but a couple of bad news stories that spread like wildfire, and then suddenly everyone's ultra cautious. And because it is such a significant amount of money for people and such a big thing in their lives, it is hugely susceptible to doubt, I suppose. So the moment there is a bit of doubt out there, then, you know, a lot of people will sort of hold off. But we get a good you know, sense of stability from this election, and we get, you know, borrowing costs starting to come down. I think that looks very positive for the sort of market ahead for the you know, for the back half of this year and into 2025.
Brilliant, thank you. Let's have a look at the next slide in terms of policies, what we've got next. So this was part of the spring budget that the Conservative Party announced their intention to remove the non-dom tax status and replace it with a new residency-based system. The Labour Party has proposed to abolish it completely. which currently allows UK residents whose permanent home is abroad to avoid paying their UK tax. I mean, there's obviously huge amounts of detail that we would need to get into in this, but in terms of a gut response to this, do you see any particular impact on the housing market when it comes to, I suppose, those non-dom status individuals residing in the UK? Do you foresee that perhaps actually they may decide to sell and relocate to a different country? I don't know if anybody wants to go first.
My brief comment on it would be, I think, yes, you could see overseas resident people who have previously benefited from the the current rules not being being hit harder with tax, and yes, potentially it could mean that you see more properties coming to the market, which is that a bad thing? Who knows? Is it a bad thing? Possibly not. If it releases up some more property.
Absolutely. I don't know whether it would affect things hugely. I think there'll be pockets, you know, for example, in prime central London that may be more affected than elsewhere. But I think, you know, we're talking about quite a small number of people this is going to affect in probably some quite localized and small pockets. I'm not sure there's going to be a discernible effect on the market that we'll sort of see on a national sort of picture.
Thank you. I think when I looked at the data, it's about 0.1% of the population. I mean, Jonathan, have you seen any kind of trends of people looking to move their money outside of the UK?
Certainly, we always see a bit more activity in and around an election. As we mentioned before, it's by nature an uncertain event, and certainly the history, some of the points I'd shared about historic volatility around the time of an election. So absolutely, we've got a lot of clients sort of primed and ready, because, you know, if you are considering an overseas property purchase, you just sold in the UK, you're buying in Spain, France, the US, wherever, that purchase could, in 2 weeks' time, be costing you a lot more money, because the rates change by the second, and let's say historic volatility about 5%. If you were talking about a $500,000 purchase, that 5% is about £25,000 difference. So if you were to be on the wrong side of that, that would be quite a nasty shock. Of course, could go in your favor, in which case you want to be working with a specialist who can help you to lock in to sort of cement those gains. So yeah, absolutely, whenever we get important events like this, we'll be reaching out to clients, having webinars like this, you know, highlighting through communication the potential for the volatility, and really just making sure we're there to update them as it happens. But say it's quite a unique situation. I've been doing the job 15 years now. Interestingly enough, I actually started a week before the 2010 general election, and that was a hung parliament, and it took about a week for them to sort of sort things out, and it was a real eye-opener to the sort of volatility you get in the currency markets and financial markets in general around the time of an election. And if it's not something you're used to or aware of, it could catch you off guard. So yeah, interesting to see how this particular one pans out, so particularly with the French election there. And on the topic of elections, it's only less than 4 months now, sorry, 5 months, less than 5 months to the US election. So that, of course, will attract its own attention for many, many reasons. But no, in terms of this particular, the non-dom status, I mean, certainly anyone taking advantage of that, it had made the UK quite attractive for those particular individuals. So naturally, removing that could have some, you know, implications for those particular clients. But in terms of a major impact on the housing market and the wider economy, perhaps nothing too dramatic there.
Thank you. Let's have a look at the next slide. I'm conscious of time for the last 10 minutes or so. VAT, so we did touch on this briefly, and the private school element we thought would be worth including, because I do think that it may well impact the property market in terms of the decisions people make when it comes to moving perhaps to be located next to a particular private school. I mean, Ed, do you foresee that having an impact in your area?
Yeah, I do. We've got, you know, a number of sort of state schools that are really excellent, and then we've got And I think actually probably the schools this is going to affect the most, from my reading of it, is the small prep schools, the sort of the schools that aren't, you know, rich enough to absorb this increase in cost, have to pass it on to parents, many of for whom this may be the tipping point to saying, you know, this just isn't viable for us. I think those bigger sort of institutions, you know, the sort of Marlborough colleges of this world, may well be able to do something, and it may be that their sort of their parent base wouldn't sort of worry too much about the 20% increase anyway. But I think that you know, the impact there on them, those people that need to move into a catchment area with a good state school, what it does for house prices in that catchment area, what it does for house prices in the catchment areas of the less good sort of state schools as well, becomes you know, remains to be seen really. And there's sort of quite different speculation on the number of children that are going to be coming out of private education to go into state education. Some people saying it will be sort of 20% or something of children, and other people saying it'll be much far fewer. So yeah, it's an interesting one. And then how that plays into the housing market. I mean, I wonder how many of the private school parents who may be considering taking their children out have got a little buy-to-let flat somewhere that they might, you know, look at sort of selling now in order to raise the capital, or even keeping and selling in a few years' time to raise the capital that was their pension, and they may sort of look to do something different with their portfolio as a result. I mean, we're seeing people a lot at the moment looking at their property portfolios, looking at valuing what they've got getting a line in the sand of an approximation of what everything is worth, and just reassessing things. So it may be that it doesn't have as much of an effect as some people think, because the you know, the sand will move to sort of fill the spaces from other parts of their portfolio and things.
Interesting. Okay, I'm conscious of time, so let's go on to the next point. So what has been made clear by Labour is that they're not going to make any changes to impact income tax, VAT, and national insurance, as well as corporation tax. I think where there is quite a lot of, I suppose, scepticism and unknowns is plans around council tax, capital gains tax, and other taxes as well, including inheritance tax, and some of the benefits and loopholes, I guess, that come with inheritance tax. So, I mean, what, James, in your opinion, I mean, I know none of us have got a crystal ball in terms of knowing what decisions will be made, etc. But with some of the rumours, I suppose, that have come about with proposed changes, I mean, how do you think that's going to impact the property market and people's decisions to perhaps keep second homes? I mean, the fact that they may decide to, you know, apply capital gains tax to personal tax bands, etc. I mean, what's your view on the unknowns, I suppose, when it comes to Labour?
Yeah, so that, in answer to your question, it could impact the housing market significantly if people suddenly have a lower inheritance tax nil rate band, or capital gains tax gets increased. We've already seen, as I say, in recent years, the personal allowance for capital gains to be dropped significantly. It's definitely going to make people need to and want to reassess their finances. And as Ed quite rightly said, lots of people do have lots of assets, pensions, second properties, and so on. And yeah, I think it could have a massive impact. But again, there is very little detail, concrete detail. There seems to be very little detail in how anything's going to be paid for many of the parties, actually. So I think we just need to wait and see what's going to happen. I would be very surprised if you saw any real shocks come out very early doors. But I think what you've highlighted there, or Bloomberg have on their research, is the obvious ones. Capital gains tax, inheritance tax, they are easy wins really, because they don't generally affect low to middle class people generally, because if you've just got one property, it's probably not going to affect you too much, inheritance tax or capital gains. But if you're a landlord, it could affect you significantly.
I mean, there's a question that came in from Simone. What the question is, what impact is likely for those that have small farms with some agricultural land? Because I think there's some benefits at the moment in regards to inheritance tax.
Yeah, so generally on that one, so if you've got, it used to be called business property relief or agricultural relief in regards to farmland, but if you're actively farming land to encourage you to pass it down the generations, it's generally got an exemption. So again, if we want to continue to grow our own vegetables, herd our own sheep and cattle, then to get rid of that would probably be quite foolish in my opinion, because it's a necessity, isn't it, to be able to grow your own food in your own country. So yeah, I would be surprised if they got rid of the agricultural relief in my opinion, but they could get rid of what was business property relief. It's called business asset disposal, I think now, relief, which is generally where you've held an asset for over 2 years. If it fits within that category, it could be an unquoted company, for example, or a business. If you're running a business and you run it for more than 2 years, if you die, then generally you can pass that business on without any forms of tax. If they were to increase taxes there, it would have quite a big effect actually, but it could be a way of generating income.
Thank you. I mean, Ed, I don't know if you've got any thoughts or comments on
Yeah,
other unknown elements that may come into play.
Yeah, I mean, I noticed on the sort of small farms and agricultural land, you know, Greens, Lib Dems and Conservatives all pledged an extra £1 billion for agriculture in the UK. How that sort of filters down to a sort of small farm, I don't know. Labour don't seem to have pledged anything towards agriculture. And then you've got the Reform Party pledging an extra £3 billion. Towards agriculture, so it features quite highly and quite prominently on you know, most of the parties apart from Labour haven't sort of pledged that. And also I got, you know, I guess you got the things like how net zero commitments affect things, how biodiversity in planning affects things, and you know, how land can become more important for these things, for carbon credits, for all sorts of things. So lots of elements at play in there. Yeah, it is a little bit of an unknown. However, you know, like with a lot of things, I think we won't see any immediate changes, as James has said, on these things. I think it'll be a process of time to see any discernible change.
Thank you. And for the last couple of minutes, I guess, in terms of wrapping up, we've covered a lot, so thank you guys. It's really interesting to hear all of your perspectives on the impact to the housing market. I mean, I suppose, Jonathan, from your perspective in terms of closing, do you think that there is a kind of forecast around the election uncertainty and the rates that we might be looking at ahead of the summer? What's your advice, I guess, to those that might be thinking, do I move my money now? Do I wait? What would you suggest?
So currency strategy is always important when you're considering an international purchase, because the variation can change your budget so much. And I think what we'll generally do is have a consultation with the client to just understand their position, talk through the options that we have to fix exchange rates. We can fix rates for up to a year on a forward contract. Their budgeting, their plans, you know, some clients may be on extremely tight budget or just very risk averse, and they just don't want any risk whatsoever. So in that scenario, we'd lock everything in quite early on so they know exactly where they are. And that type of strategy can work very well around an election, because you're just taking the risk out of it completely. Contrary to some views, no one knows exactly what the rates are going to do. It's just a reaction to what is happening globally in terms of economics, politics, etc. And No one can yet been able to predict the future. So, and then you get the more clients more with a wider attitude to risk, who may be willing to allow, you know, part of the rate to move against them in the hope of getting a better deal, and then we'll update them a bit more regularly about where the market could be headed. And we've got other tools to try and capture particular rates if they go in their favour. So a bit like we've said, you know, it's just important to have that conversation with a specialist, understand all of your options, and then try and go from there. But I've seen quite a few reports. If we look at pound euro levels, we're in the 118s at the moment. That's actually almost the highest in 2 years. And there are some forecasts for that to go over 120, very much based on over the next couple of weeks. A strong Labour win, supportive for sterling. And then if we're looking at the euro, France, a bit more uncertainty there with the potential for the national rally. The far right party, they're doing very well in the polls. So that could see a little more uncertainty there in terms of the economic makeup, sorry, the political makeup in France, maybe more of a hung parliament scenario there. It's not too clear, but that could lead to a little bit of euro weakness. So 120 could be on the cards, but again, we'll have to wait and see. No one knows exactly what's going to happen.
Absolutely, thank you. And Ed, what's your kind of final thoughts? I mean, I suspect there's quite a few people on the call wondering, should they buy now? Should they wait a few months? And likewise, when it comes to selling, what's your final thoughts and advice?
Yeah, I think whether or not it's a good time to buy depends on what you're buying, how you're financing it, and your, you know, sort of reasons for doing so, I suppose, and your motivation. You know, obviously looking at it as a pure sort of investment from a buy-to-let sort of point of view is totally different to if you're, yeah, buying a family home for yourself, or you know, you're a first-time buyer looking to get on the ladder. You know, I think if you look back at the last, you know, 60 years in property, you've got a pretty good kind of trajectory of prices going up, bar a few little wobbles. But you know, what's always quite interesting is the speed at which it comes back to the market. So if you look at the credit crunch, when I started being an estate agent in London, sort of 2007, 2008, it actually only took 18 months to come back to where it had started from. So yeah, it was a bit of a turbulent time in that. Nothing like what we're seeing at the moment. You know, that was really sort of turbulent. So the sort of any uncertainties, but at the moment, any sort of slight price corrections have been, you know, a very insignificant compared to what was happening then. But you know, we're sort of generally speaking, you know, property's proved itself to be a reliable investment, whether you're buying a home for yourself or just a pure investment. And I think if you're you know, holding out for lower borrowing costs, I can understand that, and hopefully there will be some good news at some point on that. And there's already starting to be, with James mentioning Barclays sort of announcing their rates, so that's good. But you know, I mean, there's, as long as you're going to hold it for long enough, then there's never really a sort of terrible time to buy. There's probably a less good time to buy. But you know, generally speaking, the market's proving very resilient, as I said earlier. And the good news for people looking for something to buy is there is somewhere between 25 and 50% more stock on the market now than there was this time last year. So you've got more choice. It's a nicer market to buy in because you're not competing with everyone on the first day something comes on the market, like you were in 2021, when you'd have a launch day on a Saturday, you'd have 30 viewings, and you'd have, you know, 10 best and final offers on the Monday. Pretty brutal environment to buy your sort of property in. This is a bit more relaxed of a market. You know, a good property, still a good property, is going to attract lots of interest, but it's actually, I think, a favourable market to buy in.
Excellent, thank you, Ed. And James, final thoughts from yourself?
Yeah, so I think certainty is generally good for markets. So when we see the conclusion of where we're going to get to, I think that will only be a positive thing. Realistically, there is likely to be rate cuts on the horizon, which again should be positive. Whether you're buying individually because you want to buy your family home, or whether you're buying for investment, are two very different things. and I think things can hopefully only get better from here on. But there is, I think it's going to be a slow burn, in my opinion. If we do see a change of government, I don't think you'll see changes, as I said earlier, quickly. I think it will be very conservative changes, even though it might be a Labour government, because you just what markets don't want, or what governments don't want, is they don't want shocks, which is what we did see a couple of years ago. So I'm relatively positive about the future, and I really appreciate the opportunity to be on here this evening. So thank you for inviting me.
You're welcome. Thank you, all of you. It's been really insightful. I've learned a lot, and I think it's really good to debate what the impact will be on the property market. And I think from what we've heard, actually, this time around, in terms of elections and how they've gone in the past versus now, it actually seems really positive. And actually, the impact has been nowhere near perhaps what it's been in the past. So I suppose showing the sentiment amongst consumers that actually it is life goes on, it's business as usual, life as usual, and actually you can't time things perfectly and change of circumstances personally, and actually moving home is a very emotional thing to do. And actually, if you find the right property, the best time is now, isn't it? You know, we can all wait and rationally try and decide when the best time is, but ultimately, if the time is right now, we just need to get on with it, because like you say, fundamentally there's not going to be any major changes immediately. So I really appreciate your time. Thank you everyone for joining us, and for those on the call, we will share the recording and everybody's contact details. So I appreciate we haven't got into the detail of any individual circumstances, but as the election unfolds and we do get a bit more detail around some of the plans, I'm sure you may want to reach out to Jonathan, Ed and James to get some more individual advice. So we'll share their contact details with you. But thank you very much, guys, for sharing your evening with me for the webinar today. And I wish you a fantastic rest of the evening.
Thank you.
Thanks, everyone.
Thanks very much.
Take care.
Thank you,
Bye.
Nikki. Thank you.